Back in studio, Danny.
There you go.
Omicron be damned. We are back, bigger and better, bolder than ever. Danny, I've got a couple things I want to talk to you about. Market is, market could be falling apart. Maybe falling apart.
A lot of people think so.
A lot of people think so. We're going to get to that here in a moment. But I've got a couple things. We can do market first, but I'm going to read you this first paragraph, okay, of something. And you tell me if you want me to go on later in the show. Not right away.
Okay. I'm cringing already, but let's hear it.
Because I think what's happening in the markets, and listen, stock nerds and market lovers, we'll get to all the selling and all the other good stuff. But I believe the market, it may be on a 2000 to 2001 trajectory. I kind of covered that in the video this week on Wednesday. And I'll get to that here momentarily. But I got to read you this. This is something I read all the way back at the beginning of December. And I've been sitting on it for this moment in time. Mm-hmm. Truth be told is I forgot about it. So, but it's interesting. I keep a stack of reading material by my coffee maker. This is actually true. So if you go in our kitchen, there's a stack of reading material. Like some people keep it on the bedside table, you know. Yeah. I'm not reading in bed. I'm going to bed in bed and making babies, as people know. So we're doing other stuff there. I'm not reading. Like people who keep a reading stack by the bed.
My question is, when are you going to stop making babies?
Oh, we're done now. Okay. Yeah. We are. We're like, I have been officially told we are done now. Yeah, like after 3, like I have been told, like, well, this one was, it was a difficult pregnancy for Tanya. It was really difficult. So, and we were debating about having the 3rd. Like, we're like, hey, should we have the 3rd? You know, and then lo and behold, because I don't keep a reading stack by the bed, we're having a 3rd baby. Okay. And we thought that was Jesus talking to us, but it apparently now is saying he's telling Tanya that we are done having babies.
Well, that's probably, the family's a big family. Three kiddos?
Oh,
Shoot.
3 kiddos. Yeah. It's a circus.
Yeah, it's true.
Yeah. And so, but baby's doing well.
Don't you dare leave out Reagan.
Oh, that's 4. Yeah, it's a big, yes, there's 4. So it's Remy, Reagan, Nora, Graham.
Yeah, make sure you get the names right. There's nothing worse than, especially if your spouse hears that you forgot one of the child's names.
Happening already. I was feeding Graham at like 2 a.m. this morning, and I looked down. I'm like, "How are we doing, Remy?" And I'm like, "You're not Remy. You're not Remy. You're Graham." Already messing.
Would have been bad if it actually was Remy.
Yeah,
that would have been a problem.
Well, that's the problem. He came down. He came down before I went to feed Graham. He said he had a nightmare. So he was sleeping in the bed with us. Oh, by the way, big bed update. You want a bed update, or you want me to do stocks?
It depends on what you're going to say.
Yeah, we're talking about the bedroom. Got a new mattress. And let me tell you something. We debated, we were like, do we go Tempur-Pedic? Do we go Zach Prescott sleep number, which that bed seemed to do nothing for him. Yep. And so I've seen the commercials, and he's touting like performance enhancing, and I'm thinking,
I want my money back.
That bed is doing
get your money back.
He's like, my sleep IQ is a 94, and I'm like, that might be high. And so we got we're for like $500 or $600. It was on sale at Costco, right? And we're like, let's just do a tester bed of the memory foam, and if we don't like it, we'll just take it back to the Costco, right? Because that's what Costco does. Right. And so, how cool was it to cut open a mattress and just watch it like inflate in front of your eyes? So it's the Nova Foam King 14-inch firm memory foam bed. It's awesome.
You like it?
I do. I give it a.
And it's a King? California King?
No. And by the way, interesting note. I thought California King meant it was wider, so you could get further away from your spouse.
There's 2 different kinds. There's one that's longer.
Oh, yeah.
And there's one that's wider, and they're really hard to find sheets for.
Tanya tells me the California King is just longer, and I'm like, well, I ain't tall, so this is not an issue for Timmy. Anyway. Okay, so I digress. Timmy! So I digress. This article, a $300,000 mistake, keeping IRA gold at home. Listen to this first paragraph.
I already know where you're going with this. Go ahead.
Yeah. So the author starts out here, Laura Saunders. It's official. Owners of individual retirement accounts with assets invested in gold and silver coins can't store them in a safe at home. So ruled a judge in a recent tax court case. Andrew McNulty et al. Versus Commissioner. The decision will cost McNulty and his wife Donna dearly. Taxes of nearly $270,000 on about $730,000 of IRA assets, plus penalties likely to exceed $50,000.
Yep.
That's a good That's a good paragraph.
They were always kind of, that was always kind of a debatable topic, whether you could actually be your own custodian and open up an IRA. And there was a father-son lawyer group out in Arizona, I think, that basically said you could do it. And I think they were the ones trying to push that passport IRA. Right. But anyway, they were trying to do this IRA where you could open up an IRA, somehow have it in an LLC. The IRA owned the LLC, and the LLC would then own the gold.
So Danny doesn't know what I'm going to talk about before the show, because clearly he would have said, "Don't talk about your nightstand, how you keep your reading material by the coffee maker," which I frequent like a ton. Oh, by the way, coffee maker update. So I got the pour over coffee maker from Starbucks. I used my stars to purchase it because I buy a lot of coffee, right? And so I got this coffee. It's a pour over thing. You put it on the top of a cup with the number 2 filter, cone filter, put your grounds in, then the boiling water right on top. Yeah. New favorite way to make coffee. I've gone the gamut. Like I've gone Keurig. I've gone regular drip. I've gone AeroPress. I've gone French press. The Macron of coffee.
What about cold brew?
I have not cold brewed. I'm not cold brewing in the house yet. There's a new.
It's actually pretty good.
There's a new company out there that'll sell you coffee concentrate. They'll ship it to you frozen, and then you pour the hot water on top of the frozen coffee. And then the fifth way is Panera, and so
of course,
membership,
yeah. And so they call it the Sip Club now, if anyone's curious. And so anyway. Yeah, the sip. I don't know if it's a sip.
The show not sponsored.
Have you got any money for advertising for them?
No,
yet?
One day they'll hear my words.
Someday.
Yeah. Lord, hear our prayers.
That's right.
And so anyone who grew up in the Catholic Church.
Amen.
Free club memberships for the whole crew.
Will Panera hear my prayers? Lord, hear our prayers.
And also with you.
Yes. And so...
you lose your train of thought? You look
No,
like
I was thinking of the word... I don't know why the word repent just popped in my head, but it did. Anyway, so... I do the pour over now. Really smooth cup of coffee. Highly recommended. And so, but anyway, Danny would not have approved of all the topics I mentioned at the start of the show. If he knew I was going to talk about these, he goes, get to this. So Danny didn't know I was going to talk about this, but you're so up on it. I'll tell you what, if you are into physical assets, whether they're gold or silver or home, I'm telling you, Danny is... there's a reason why I call Danny America's fiduciary, and what he just did, unprovoked from me, is exactly, I'm drawing on my screen, Zachary, is exactly why everyone should call Revere Asset, 855-732-5932. Because I'm telling you, Danny is a wealth of practical, applicable knowledge, and I'm telling you, he would, if you've got gold coins at home or in a bank
or any kind of precious metal,
kind of precious metal, you need to call Danny. And what happened to these folks?
And by the way, there's a way to do it in your IRA. You just have to have a legitimate alternative custodian to hold them for you. You can't do it on your own.
That's where
therein lies the key.
And it involves self-dealing. So the whole
exactly.
Yeah, and so the rule. So this ruling, I'm going to go on for just a few more paragraphs.
Go ahead.
The ruling disallows a scheme. See, and this is where I'm like, you've heard me make fun of the dude from MASH trying to sell you gold and silver. Mm-hmm. Right.
Honeycutt.
Yeah, someone, yeah. The ruling disallows a scheme that was heavily promoted several years ago when radio and internet ads touted the benefits of using IRA assets to buy gold and silver coins and then store them at home or in a safe deposit box. Promoters based pitches on a perceived ambiguity in the law despite warnings from the Internal Revenue Service and legal specialists. This article, the whole show could be this article. It goes on. It's pretty in depth. It gives you all the how, the who's, who, what, how, when, and
who,
why.
what, where, when, how.
That's what I'm trying to say. And I believe
the government doesn't like it because they can't track it and they can't get a valuation at the end of each year, and they want to keep tabs on everybody.
Yeah, this is,
and your safe is not a licensed custodian with the SEC.
No, and so the spouse in here, she thought she was following the law. That's why.
No, a lot of people do.
Yeah, and so she labeled the coins.
It looked like it was kind of on the. I mean, I did a bunch of research on that like 8 years ago, and I opted to say, you know what, there's not enough clarity here. I'm not going to recommend any of my clients to do it because if it comes back later and they rule against you, it's going to bite you in the
Danny,
behind.
I'm telling you, what I just did there was me taking a shot that Danny would know what the hell I'm talking about right off the bat of the show. Mm-hmm. It's something that I know Danny loves precious metals. He's an expert in precious metals, and
I don't know about that, but
I would say you're an expert. Like I'll I'm not no joking aside or anything. I would say you're an expert in that field. And if you have precious metals at home, and you've made them part of an IRA, whether you're a client or not, please call Danny, because I'm more than happy to send anybody the article. I've got it digitally as well, or have Danny discuss what's.
Send me the article too. I'd like to read it.
Yeah,
It also gives us a picture for the podcast today. Let's get physical.
Oh, there
we got
you go.
Olivia
Newton-John.
Olivia Newton-John.
All right.
Yeah, with Danny's face over Olivia.
Now, Don just showing off his upstairs Connecticut broadcasting skills.
That was really good. Now, it should probably be Alex, who we dress up as Olivia Newton-John. It's Alex's face on Olivia Newton-John's body.
A little blonde wig.
But just his face. Like, we want that headband from 1979,
You got to have the headband, yeah.
Yeah, the headband totally makes it. I've got Alex in a
and
unit.
then a bar of gold to the side.
Oh, yes. Like his weights are bars of gold.
Yeah, his weights are
Yeah, absolutely.
Yeah.
Yeah, I think we
pumping gold. You're not pumping hard, you're pumping gold.
Can we make then Hunter Arnold Schwarzenegger with pumping iron, except give him some gold, like subset.
What about that scene from Predator?
Maybe make him John Travolta.
When Arnold Schwarzenegger and Carl Weathers they're shaking hands and you see their biceps, you could use that as the photo.
No, we're not making this cool.
That's not bad.
Like
too
Alex
cool?
is under the
That's too
misconception
cool?
we're trying to make him look good. No.
No, not me. I'm just saying photo from the movie.
Somebody click on this thing.
I've got to send you the old the picture file I have with Kofal, me, and Shane, our old producer at Clear Channel, and we're all like pumped you up.
You should send me that. Yeah, all
our
right.
faces are on these big muscle guys.
Oh my god.
So I want to show you something real practical, stock nerds and market lovers. By the way, I believe that gold, I'm telling you, there are a bunch of people that have bought gold off the TV and made it there. That was, if you've listened to any modicum of talk radio, especially if you have listened to conservative talk radio or news stations like 1010 Wins out of New York or any of those types of news stations, those commercials were super prevalent. I wonder how many people are on the hook for a bunch of taxes because the government could come and accuse them of self-dealing. And by the way, anytime that you find yourself, and knock on wood, I never end up there, going to tax court, you're not going to win. Tax court has infinite resources to prosecute you. Tax court has imagine your hell is the worst episode of the People's Court. That's tax court. It's like Judge Judy, Judge Wapner, and Steve Harvey, who, by the way, has a new court show, and all its awfulness getting together to just litigate against you.
Ganging up on you?
Yeah. For eternity. That's tax court. Tax court is the law school failure who couldn't pass the bar except but once, tripped into this job, and now he's a prosecutor in tax court. And because he's not tasked with anything but prosecuting, human beings, that's all he does all day with an infinite bucket of money. Tax court has got to be the worst thing ever. Right?
Sounds pretty bad.
Pretty tough.
Yeah. I'm thinking,
if you got a few good people on your side, you can win occasionally as long as you have good records and you did the right thing. But if you do stuff wrong, there was way too many question marks on that doing that.
So look, let's get. The pie is done. Someone is baking.
Pecan or apple?
Pecan. Is it pecan?
Pecan.
I say pecan.
Pecan. Is that southern? Is pecan southern?
It's pecan.
You get both in the South.
If you're in
a
Georgia,
lot of
it's pecan.
What is
Yeah.
where's it's pecan in Georgia.
If you're in Georgia.
Yeah.
Where is pecan?
Here in Texas.
Alabama.
Alabama. Everywhere else.
Pecan's the better way to say it, I think.
Pecan?
It's like caramel or caramel, right?
Georgia.
Caramel's more fun.
Oh,
rolls off better. Like,
Carmel or Carmel is
Carmel
the town in California that Clint Eastwood was the mayor of.
was it really?
Yeah.
Caramel or caramel?
I don't think anyone's ever called it caramel.
Georgia on my
Clint
mind.
Eastwood was a mayor.
Oh, Clint Eastwood. You didn't know Clint Eastwood was a mayor?
I did not know that. I knew he was a
Oh,
filmmaker,
yes.
an actor.
Yeah,
right?
California will
Of
give you
course.
Arnold Schwarzenegger as governor. We'll give you Clint Eastwood as a mayor, Ronald Reagan, governor,
Just
then
say
president.
Ronald Reagan all the way
Yeah,
up.
absolutely.
And he was a president.
Oh,
too.
well, I
We
mentioned
can
that.
go full tangent with any podcast in the country.
Yeah, we are. Yeah.
We'll walk right off. Yeah.
Back to practicality. So look, markets had a really rough go of it. Let's look at this. So these are the NASDAQ futures. And anyone who's been following the markets for a little bit here knows that start of the year, of course. I mean, just look at this, Danny. Where do you – this is the cliff, right, where the Acme Anvil falls on the Roadrunner, right? And so but there is such a thing as called shorting in the hole. And I want to show people. So it's Friday, late morning here in Dallas, and we're taping the podcast. And so it crossed my mind that I should probably hawk this chart today, so I can help people not short in the hole. And because what makes it worse is if you're taking a drubbing in the market right now, people. This is the time people want to act like. Everyone's buy and holder when your chart is. Let me just switch this. When your chart looks like
Flip that over.
yeah. Oh my gosh, Danny, you are brilliant. Let's do that. And I'm not being facetious. Let's absolutely do that. So when your chart looks like this. So by the way, if you want to do this at home, you put a minus sign in front of the ticker. If your chart looks like this, everybody loves it, right? Everyone's a buy and holder when your chart does that, right? But nobody likes buy and holding, and they become active. They are proponents of active management when your chart does this. And so now how do you stop yourself from doing a couple of things? Well, you can do what we just did there. Like how we talk about don't buy extended. You don't want to buy if it's like maybe at the third HR. I don't need to go through the HR charts. Just invert the chart. If you're thinking about shorting or even selling, right? Because 80% of all stocks move the general market's trend. And so how do you know not to short this morning? And this morning opened rough. Look at this. Here is 8:30 Central. We get a little bit of a move and no, we're going to sell. And right there is an emotional response to markets. Well, Tim, how can you talk to me and that's not just another fund getting blown up? Because that's what I believe happened. Now, there's no one going to, maybe it'll come out in the news, but no one's going to tell you that a fund got blown. It was just very orderly coming down on Thursday. And it seemed to happen right after the Peloton news broke, right? Peloton around noon Central, noon 30-ish, comes out and says, hey,
We're stopping production.
well, actually, let's talk about that for a second. Peloton comes out. It's not Peloton. It's CNBC. Like, no one's going for a ride on our bikes anymore. And then Peloton drops 20%. And then shortly thereafter, the market's just like rolled over with a viciousness about an hour afterwards. I think that's a fund getting blown up. Maybe one or two. A little too long.
You're saying it's not just Peloton, yeah.
No, I think that if you're a little bit too long Peloton and they say put up more
You
money.
got a margin call.
Get a margin. I think someone got. I think.
Knock on the door.
Yeah.
Bring in some more money,
Yep,
please.
the margin. I think that's exactly what happened, and so you got this vicious sell-off. But now, friend of the show, John Najarian, friend of the show, comes out today and talked about the very suspect, highly unusual options activity moments, not days, moments before the announcement.
Somebody buying puts.
Was it Nancy Pelosi?
Okay, so in the back, so now
It's all a congressman. They're all doing it.
So with the picture, we've got Olivia Newton-Alex.
Olivia Newton-Alex.
We've got Pumpin' Hunter. And then can you get Nancy Pelosi on a Peloton like in the far distant background?
Yeah, let's see if I can bring that out.
You know this is a thumbnail, not a fat head, right?
That's right.
Yeah.
High
lot
expectations
going on.
for Zach.
Yeah. Oh, Zach is amazing with what he's able
Oh,
to do.
Yes, he is.
I'm already looking at Let's Get Physical picks.
What'd you
over
say?
here.
Olivia Newton-Alex and what was Hunter?
Pumpin' Hunter.
Pumping Hunter.
Arnold, right? That's what
Yeah.
you're looking for?
Yeah,
All
yeah.
right. Okay.
Hunter Schwarzenegger.
Yeah.
Wait, so who am I supposed to be looking like in this photo? I gotta.
I'm not gonna blend
pull-
Alex.
pull
in
her
the
up.
movie. Please, no, I'm not doing. No, come on.
Thank you, Zach. I mean, come on.
How about Xanadu Olivia Newton-John?
Oh, there you go.
Xanadu.
Hey,
She's on roller skates in that movie. And so, I'm not
Sorry,
making
Tim.
that
I didn't
up.
mean to interrupt you.
No, you're fine.
I thought it was funny.
So the market then, it's orderly, right? But how do you know not to short in the hole this morning or panic and sell? And by the way, if your stops are getting hit, your risk limits are getting hit, do what you got to do. That goes without saying. But if you're just like, I need to sell, I need to do something. Well, let's look at this chart-wise, right? Let's look, because markets did come down about 225 maybe at the lows on the NASDAQ futures to 14,532. But there's a couple things you can look at to say, okay, are the lows being tried to be put in? And by the way, if you need to sell, you need to sell. So don't let me talk you out of anything here. But first chart I come to, I want to see where we are put-call ratio-wise. And I want to look at the new norm, right? Going back to 2020, and I want to understand where this 10-period moving average, where it's at in relation to the put-call moving, where it is in relation to the put-call ratio. Excuse me, and I'll note that it's pretty high here, and you're like 0.75. That's not really high. No, that's high for the new normal for the put-call ratio. And it's a moving average, right? I've got a 10 slapped on there. To get it to go that high, I've seen markets start to bottom in this zone. Are we above 1? Yeah, we're above 1. The new norm is 0.6, by the way, not 1. So we are at my old limit. Okay, I want to see, are markets going to start to bottom? Well, what would I be looking at? Well, I come over here and I look at, and you can do this at home. If you find yourself working from home, right, or find yourself in an environment that you can monitor this type of stuff on your phone app or whatnot, this is exactly how I do it. So put-call ratio chart, I'm looking at the advanced decline. How is the advanced decline shaping up? Because price can still be falling, but the advanced decline is starting to bottom out, and that's kind of what happened.
Meaning reverse, and you're starting to get more advancers.
Yes, that's a clue. Now I want to see the ticks. Tick, if I was Chris Berman, tick, 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 tick. And so I want to look at them. You can go on a minute chart or a 5-minute chart. This is yesterday's low. This was the margin call. This was we can't. It's not coming back. We're getting flushed. Okay, someone got flushed. But look at this morning. This is here's that where the NASDAQ goes up. The NASDAQ ticks. The ticks overall don't really get that bad, especially in relation to yesterday. And then you have plus 800, and that happened about 9:20ish, right? And then 40 minutes later, you get this 1150 tick to the upside. That's going to staunch the bleeding. Now, where we go from there, so when you see a preponderance of things, like when you see that first 800 tick, that typically stops the bleeding. You might not go anywhere, but it stops the bleeding, right? And so, but being able to read the notes of music can stop you from doing a couple of things. Like if let's say you haven't hit your stops, right? Or you're thinking about shorting the market. Maybe it just puts the pause in it. Let's just see how the picture develops a little bit more. We get that 1100 tick. Now let's go back to the NASDAQ futures here. Oops, pardon me. And so NASDAQ futures take out the resistance from 9:30 Central this morning. And now, look, they haven't, even with a minus 1,000 tick, they didn't come back to the lows. That doesn't mean they won't today. This market could be toast, and they're going to sell it off into the close. And by the way, if they sell this market off into the close, they take out the lows, or
it's a bad sign.
It's a really bad sign for Monday. Like it's a really margin call Monday is coming. Okay, like the futures will probably open up very badly on Sunday night, and I would look for a lot of selling come Monday.
Let me clean up one thing you said,
please,
to clarify. When you were talking about, being careful of shorting in the hole, and one trick you can use is you can put a negative sign in front of it on Thinkorswim, so it inverts the chart. Mm-hmm. So it makes it look like a bullish chart of when to buy.
Right.
Then you know when it's setting up, when it's starting to set up and you're getting a buy point, that's where you would buy versus being extended toward the top, which inverted or in a regular chart, not inverted, that's at the bottom.
Yeah.
So in other words, you're just showing a bullish chart.
Go back to the Charts Act, please. It's inverted right now on a daily.
Right.
And so this chart is, like if we, I talk about, like, I like to buy close to the 21 of that moving average. Like this chart's extended. You're extended right now to the downside. It doesn't mean it can't go lower.
Right.
But when we talk about probabilistic nature of markets or being a probabilistic investor or trader, if we talk about being a little bit disciplined in your approach, this market is,
it's tough. And an easier way so hedging is different than shorting, but you're trying to make money. But if you're shorting, that's okay. But an easier way to do it is raise some cash.
Yeah.
Raise 30, 40, 50% cash and reduce your beta.
The allure of shorting the markets is sexy because you make money twice as fast, but they reverse.
Twice as hard, too.
Yeah, and they reverse. And so, if you look in relation, just look at this daily chart. This is October. So what have we done? We've come back to October. That right now, that doesn't feel like death and destruction to me. I've lived through, when you talk about the flash crash of 2015, you remember the August?
Yep.
Or you talk about March of 2020.
Or December 2018? Was it
20% in a month. Maybe we get that. But right now, we've come back to support below the 200, by the way. But this to me right now seems to be a point where the markets may, I'm going to hedge here, may suck in some more longs, get you back up to the 200-day, and then we'll see what happens to markets.
But the Nasdaq's just around correction territory.
Yeah.
Just in couple weeks, it's down about 10%.
But I think this is
13.
We're above the two. We're above the 200-day on the S&P 500. Maybe not on the ES, but the S&P 500 is 44.29.
And let me show you this, and then I'm actually going to go to Don here next.
Okay.
Let me show you this on a monthly chart because I believe this is the pattern we may be in. So I believe this market may be analogous to the 2000 market, and let me show you. Okay, so let me get NDX up here, not the NQs. So NASDAQ 100, everybody knows what happened in 2000. And so when I'm looking here, you can see the big one up in 99. The market didn't sell off in 2000. It peaked in 2000.
It peaked in March of 2000.
Right. And so here's 2000. Here's the end of 2000. Here's the beginning of 2000 where I just ticked off. We're on a monthly chart. Keep this in mind. You get this big pullback to the monthly mean. And then it looks like the market's going to recover. And remember, you don't see this, right? You don't see the right side of the chart. Right here, it looks like, imagine what the media is saying back in the middle to leading into fall of 2000. Oh, markets are back, right? It looks like we're going to go up and challenge the old highs, and a whole bunch of other stuff is happening. You get into, then it slips, and then look, the sell-off is really 01 into 03. 01 into 03. And so, where are we at in time and space right now? Where's our situational awareness bring us? It brings us here. So here is the monthly 8, the monthly 5. Could we come down to 13.4 on the net? That's the monthly mean. You're at 14,686. Probably. Are we going to do it right now in front of Amazon, Google, Apple earnings, Tesla earnings? I don't know that. If you ask me my gut feeling, I don't think we do. Okay? That doesn't mean we can't do it. And the last time we came down to the monthly mean was the pandemic. And the last time we came down to the monthly mean, Daniel, that 2018 rate raise before who'd had a change of heart? Jerome Powell, the Powell pivot. I don't know if he pivots, though.
I changed my mind.
I have seen the light. You people are losing money, and it's me who did it. Hallelujah. Peace be with you. We don't raise rates.
And also with you.
Yes. I don't know if Powell pivots here. The difference between 2018 and 2022, the inflation is ginormous, and it's not simply energy and product. It's the wage inflation. The wage inflation is not going away. Mm-hmm. The only way you bring down the price of homes, the only way you bring down recently increased wages is you trigger yourself into a recession, because then people understand.
You got to kill demand. Yeah,
we're in a recession. I can't afford to pay you, and then you just feel grateful. And I'm not being facetious when I say this. You feel grateful to have a job, right? Like they're going to flip the script here, where I'm going to be delivering $30 McDonald's hamburgers on DoorDash. Like people are going to stop paying these fees. Like people are going to stop using.
They'll go to McDonald's themselves.
They're going to. Oh my God! Is the economy?
I'll go actually pick up my own burger.
Is the economy going to get so bad that people will get off their butts and go to McDonald's themselves? That's the question. And so they're going to flip the script here, where it's not that it's going to be a job pickers market. It's going to be grateful to have a job, and that can happen right quick. And someone's like, Tim, that's ridiculous. The economy is super strong. It only takes but a few quarters of slowing. How many quarters, Daniel, of slowing GDP till they declare it a recessive economy?
I think classical definition is 4. It might be 2.
It's 2. It's 6 months.
Two. Okay,
it's 2. Mm-hmm. And so
always good in hindsight.
Exactly.
Yeah.
And where do you see? And that's why I'm bringing it up, right? Because Don is being facetious. Anyone who doesn't realize Don is being facetious right there.
But you're already seeing it in the leading indicators. It's already slowing.
You're seeing it on the charts.
Price.
Yes.
Yeah.
Well, the charts are one of the best leading indicators.
That's correct.
And that's why I'm pointing this out. Like, you want to be really careful here. I'm in one breath, I'm saying don't get too bearish in this particular moment in time. But in another breath, could we be in some kind of 2000, 2001 market where the market catches its breath and then it rolls over?
It's so funny. Remember I told you before the show I had a little 2-3 minute thing that I wanted to talk about. It so perfectly dovetails with exactly what you're talking about.
Do it right now.
All right. So number one, global investment bonds, investment grade bonds, just had their worst start of the year since 2000, since the tech wreck. You were kind of talking about the similarities. Okay. Now Jeremy Grantham, and he's a value investor, but he's out there. There's a bunch of other pundits kind of saying the same thing, kind of what you said, Tim, but he's one of the loudest, most well-known, and he's basically saying we're in for a 50% crash in markets, stocks, bonds, real estate, and he said, this is a super bubble. And the one thing I do agree with him is he's basically saying it's the Fed. It's caused by the Fed and the loose money. He said ever since Alan Greenspan became chairman, that's when you have these boom bust cycles increase. He said, but basically he said that the 60-40 portfolio is not going to protect you because bonds are not going to protect you. They're going to offer little or no protection. Mm-hmm. And whether you agree with him or not, and he's been saying this for about a year. You had a pretty good year last year, and he goes back and says, "Look, in 1929, when you had that the biggest correction, biggest crash, the year before the markets were up, big." Right before the crash, right. And that happens quite a bit. You saw that in 2000, but he actually compared the markets today, the charts, to what looks like 2000, 2001, which is exactly.
Oh, he did?
Yes. I mean, he basically was he's not a technical guy.
Okay.
He's a fundamental guy, but he was giving the same story line that you were saying. It looks like a repeat of 2000, the tech wreck, and I think we can pull back 20%. Now, and he said, so you really need to look other places. Now, here's where I disagree with him. He says that where you need to invest in is Japan, emerging markets, gold and silver, and then raise cash so that you can deploy after the rout, right? Now, I agree with Japan and emerging markets because if the U.S. stock market goes, Japan's market's going to go, and so will emerging markets will get trashed, I think, because you'll have a flight to quality. You'll probably have precious metals go up in treasuries, right? But so I would agree with the precious metals part. I would agree with energy, steel, ag, commodity related companies, and I would raise cash. But if you are doing a buy and hold mentality, which we don't do here, we're active, we move around and we adjust and we look at the charts. But if you're kind of in that pie chart mode, again, you need to look at your allocation and you need to really think about it long and hard, because if you've just got conventional equities and bonds, that could be very dangerous, and you're going to need to look outside the box and do some other asset classes, in my opinion. But I just think it was funny because I read this article, and he had a couple of them out, and I don't want to dive too deep, but he gave various reasons of why he thought that we were in trouble. Mm-hmm. And basically he's saying, he's a value guy. So he says, look, the stock valuations are very high for where we are in the economy. The economy's starting to slow. You have inflation. You're going to have some, profit margin squeezes. And anyway, so
there's a bearish picture, and we've been talking about it for a while, that you can paint here, that we pumped this market full of a gazillion dollars.
Funny money, yeah.
And all we got was 2.3% GDP.
Exactly.
Like that's a problem. And so whether it shows up this moment, later in time.
But here's the main thing. The main takeaway is, regardless, you need to have a plan. Right. And you need to have a plan in place in advance, because when it does happen, it happens very quickly. So remember during COVID, March of 2000, the market, the S&P sold off 35% literally in 4 weeks. People just soiled their pants. I was going to, they freaked out. I've talked to 3 or 4 people that never got back in and never knew how to get back in. And
they planted seeds in the fruit of the loom?
Yeah. And so they never got back in and enjoyed any kind of bounce. But the whole point is the market's going to go down 3 or 4 times faster than it goes up. And a lot of people will get paralyzed by fear and just want to sit it out and go, okay, well, if I just shut my eyes, it'll come back. The markets will come back. It may not come back for 2 or 3 or 4 years. Yeah. The other thing he said, which I don't know that I quite agree with, because people are used to, they've reacted like Pavlov's dog. So when the Fed says we're here to help, like, right, I'm the government, I'm the Fed, and I'm here to help, we're going to bail you out, that you may get a strong rally. He thinks that even with Fed intervention, you're going to see a big sell-off. He doesn't think the Fed can stop it this time. I don't know if I agree with that so much. I think you could get a big sell-off and then a big rally again.
There's a Powell put somewhere.
Yeah.
And the market's going to find it. The market will find Powell's breaking point.
Exactly.
Yeah.
His pain threshold.
They will find Powell's pain threshold.
And it's after they hit theirs. It's after the investors hit their pain threshold.
Because it's clear.
He'll hit his.
Right? Like after saying transitory, Powell wanted to get reelected, right? Like if he didn't want to be the Fed chairman, he would have just stepped down. Like, hey, I got us through this. It's exhausting. I'm good. He clearly, it's a bit of an ego. By the way, speaking of ego trip, you know what? I don't want to go there. Never
mind. I was about to say, don't take a turn. Keep going. We're on a good topic.
So, it's clear that he wanted to be reelected. And he wants to see the economy out of this. But he got orders from on high, even though it's supposed to be an independent office. Stop inflation. Well, that's like the woman who swallowed a fly, right? Like, why did she swallow the fly? And then to get rid of X, to get rid of Z, to get rid of all these different things. Okay, I'm going to stop inflation, but now we triggered ourselves into a recession. Well, how are we going to trigger ourselves out of the recession? I'm going to lower rates that we just raised, but we haven't raised anything. We even haven't tapered yet.
Right.
So think about how the media is covering what's happening in markets right now, and it's because there's so. I hope Hunter talks about it. I'm teeing him up because I'm going to go to Don first, then Hunter, about the destruction in SPAC land and in small cap land. And
oh man, I'm so ahead of you. I'm over here. I'd already been writing in my notes this morning. I had a few things.
And so let's do this though. Anyway, so what is Occam? What is the Reazor? It's game theory.
Occam's razor.
Occam's razor.
Yeah.
I don't think I'm using. I'm about to not use that right. So, but what's Powell going to do? Destroy the economy to get rid of?
He's got a Hobson's choice, man.
Yeah,
that's why I don't know why you'd want that thankless. Right? It's like hot potato with the Fed chairman. Yeah. One of them is gonna go down with the ship and inherit the crash. Yeah. One of them is going to be blamed for it, pinned it on. I wouldn't have wanted that job when Yellen left. I would have said, no, I'll just sit in the background.
So this will be interesting to see. I say that he'll toe the line. My prediction is he's going to raise rates while continuing to buy bonds.
Yeah, printing. Well, that's what they did in the late 70s. They kept trying to raise rates while Congress was throwing money out of airplanes and spending, and nobody had the confidence that they could stop inflation. So while they were raising rates, you still had inflation increasing. And finally, they got Volcker, and Volcker said, I'm going to kill inflation, and he did. Yeah, he rose rates so fast and quick,
So anyway, let's do this. Let's go to Don. Don's got some. I know Don's got some thoughts. A little out of order. Don, I believe it'll be the 2100 under the 21 this week. Don will cover all 2100 stocks that are trending below their 21 exponential moving average. And,
Imagine.
Yeah. And then
it's closer to 21,000, I think, at this point. But no, the 21 over 21 is in disarray. What I'm going to focus on in this week's Friday video is a recap of bear market stats.
Ooh.
I think it's very appropriate to show the last 13 bear markets, what led up to them, what are some stats that you want to look for. It's important to understand that the market doesn't get into serious trouble unless the S&P 500 breaks below the 200-day moving average, and we're sitting right on it right now. So that's our line in the sand. We've got about 25% exposure via the S&P. We haven't owned a stock since the first week in January when we got stopped on everything else that we owned. And anything that the ones that were left standing, everybody said, oh, you've got to buy Ford, you've got to buy this, you got to buy that. It's still going up. Every one of them got clobbered this week. There's really nothing left standing. And that's what you got to do in a bearish, I'm not going to call it a bear market. I'm going to call it when the market is acting in a bearish posture. And that's what we recognized in the first week in January, got out of the way, got rid of all of our longs, and then just managed our index positions against different levels. And as we've broken the 21, we've broken the 50, we've broken the 100, the 21-day moving average fell down below the 50-day moving average. We just take exposure off. And right now we've bounced at at the line in the sand right there, the 200-day moving average, and that area really needs to hold. That's just from an index perspective, though. Individual stocks are absolutely decimated. There's not even anything that I would consider buying right now. Oil stocks held up the best. They're now coming under some pressure. Financials held up for a while. They got destroyed, especially with earnings that reported this week. Take a look at Goldman Sachs. That's not a good chart. JP Morgan, too.
Yep.
So financials, hit the road too. Steel's held up a while now. I look up and all the steel stocks on my screen are down 5, 6, 7% today. There really is nowhere to hide in a bear market. You need to get out of the way. But the good news is leaders will emerge when we stop going down. We're not going to guess when we're going to stop going down, but we do know that the markets don't get into serious trouble until we break the 200-day moving average. On average, markets peak 12% above the 200-day. This one peaked about 9% above, and we're sitting on the 200-day right now. But on average, they go down 27% from top to bottom. So that's another 12 from 27. That's another 15% you can go lower below the 200-day moving average, and we won't be anywhere near the market while that continues to go down. Then we'll look for what's called a follow-through day, and I talked about the rally was still intact last Friday, and what would it take for the rally off the bottom to end, and that ended on Tuesday when we broke below the prior low. So now we're very clearly in a correction. We don't guess where the bottom is, but by our process, we're never more than 4 days away from what's called a follow-through day, and that is the markets rally strongly 4 days off of a bottom, and then we look for stocks that are in good shape. And right now, there just really aren't any. A lot of stocks that held up, like bring up Qualcomm.
Oh, sure.
A lot of stocks that were holding up that you thought, might be putting in the right sides of their bases or a flat base broke below recent lows. This is very typical of what you see those big four down bars this week. Stock after stock after stock that held up fine got hit this week, looking like that. Micron is another one. MU and QCOM were the last two strong tech stocks that people were hiding money in. Micron chart looks very much the same.
Ticker?
And
MU.
MU.
Thank you. Totally brain.
Same thing. I mean, they gapped up on earnings, continued, showed relative strength, and then nope, heading for the exits, back into its base. This is what happens if you try to stuff money or store money into the last of the holdouts, because when they raid the whorehouse, they get the piano player too at the end. These were the piano players.
Well, that is not an analogy.
I like that analogy.
I have never heard that analogy before in my life.
I've heard that one.
Really?
Definitely. Yeah. Oh yeah.
Well, you're a fitness buff. I mean, we saw you, Olivia Newton.
It's a trader saying. I've heard that one. Definitely.
I've never heard that before in my life.
So again, what we're
No, okay. Sorry.
So what we're looking for is, what happens down here around the 200-day moving average. We've got, like I said, about 25% exposure left just in the S&P 500, and we're not guessing what's going to happen. The Fed is not accommodative, very clearly, but do take note. What did China do this week? They cut interest rates, and capital goes to where it's treated best. If money starts flowing into China, do you think that's going to put some pressure on our Fed to relax things a little bit and put the hammer down maybe? Those are just guesses. But that is a pretty damn big economy that's now cutting rates to stimulate the economy.
Well, but they're also trying to, they've got a major real estate crisis, and their two biggest funds, Evergrande and I can't remember the name of the second one, are Evergrande's a $400 billion fund. It's 10
okay.
times
Well, how
bigger
many
than-
crises have we had over the last 2 decades? And what do we do?
No,
We
I'm
threw
not.
money
Yeah,
at
but
them.
that's
and what does it do? It solves the problem.
What happened in 2008, Don? That's what they're trying to cover. They've got a major real estate crisis, and they're cutting rates to stimulate lending because they're in deep kimchi. In fact, our sell-off in our markets may be because of China. You may not know. In other words, we may not know with hindsight.
Okay, we won't. You're right. And as always, we'll follow the charts. So right now, the 200-day moving average for the S&P, 44.29. The 40-week moving average, that's the equivalent on a weekly chart, is 44.46. We're right around there right now, give or take 1%. But that's our last line in the sand as far as having client money exposed. And like I said, we own no individual positions.
Right. All right. I tell you what, Hunter, let's
yes, sir.
Let's talk destruction on Sunday.
Yeah, well, it's actually like I guess I had telekinesis with you and Don because my list here is in quotations the last leaders, and I plan to go over a lot of what Don was just talking about, the stuff that was hanging in there that everybody was looking at. Is there really is not anything that really has been spared. So we can run through these real quick, Tim, rapid fire style.
Let's do it.
And then we'll look at a couple of
have you heard the song?
couple of growth stocks too.
The word when you said telekinesis, which is not a word often used, and so when you hear the word telekinesis in a song, it sticks with you. There is a song by Jack Black. What is Jack Black's band? Anybody?
Tenacious D.
Tenacious D. Wonder Boy. That's telekinesis, Kyle.
That's telekinesis, Kyle.
That is the best, one of the best lines in a song. If you've not listened to the song Wonder Boy by Tenacious D.
How did that wander into the show? Tenacious D.
It was an extragenous event, Zach.
Yes. Thank you, Don.
Thank you, Don. Yeah.
Extrogeny.
Very true. All right.
All right, Hunter, go ahead, brother.
Yeah, man. Pull up John Deere first. DE.
Yes.
So,
Tractors.
as you're going to see when we go through these, not all of them look necessarily terrible, but you'll see that over the course of the last 3 days, 4 days, they have not been immune to a pullback either. So John Deere 3 days ago, 385. Today we're at 365, 367. And these, John Deere and Caterpillar is the next one, Tim. These were two that were holding up really well, even while some of the other stuff was pulling back. These were flagging or acting pretty well. Not so much anymore. Now, they have pulled back to these moving averages, and for the time being, they're bouncing. But the point here is just to show you that nothing has really been safe this week in particular. Go ahead and pull up Ford as well, Tim. Ford was down almost 10% intraday a couple of days ago. I know it was down around 7 or 8% or so. Just recently was at 25. Here we are at 20. We'll keep rolling through these. AMT, American Tower. Now, this is certainly impacted by rates and what's happened with the move in yields. But, I mean, look at this. I mean, this is a brutal sell-off in what's supposed to be a REIT, a safer, less volatile security. CCI is Crown Castle. It's pretty much a very similar business model. It has a very similar chart. Just a brutal pullback given their normal ranges and volatility. Applied Materials, AMAT. This is one of those that was actually breaking out while the market was kind of in shambles a little bit. And lo and behold, the next day it's down 10%. So we've gone from breaking out, new all-time highs, to now down here at the 200-day. Is that right, Tim? That 138 right. Area,
yes, yes,
that orange line, yellow line. KLAC, yeah. That is same space, semi-equipment, same story. Just falling apart a little bit. I mean, if you want to look at how crazy some of the trading has been and how volatile and sharp some of these moves have been, go look at a 5-day chart of Applied Materials and KLA 10 core here. It is absolutely insane, some of the movement you've seen on these stocks, given how big these companies. I mean, this AMAT is a $125 billion company, or at least it was a couple of days ago. So just some really tough moves.
18.92% on KLAC, top to bottom there, just I'm on a 4-hour chart. And then AMAT. I'm curious now about AMAT. AMAT. Oh. Look at that.
20% roughly at 19.
19, yeah.
Yeah. So, and I mean, and I remember this because I texted Don and Alex and said, hey, semi equipment is actually holding up really well today on the day where it was looking good, that high. And then the next day it's, they're absolutely crushed. So, just a couple more here.
This is in the middle of the biggest semiconductor shortage in the history of mankind. And all these companies do is make equipment so you can make more semiconductors. What does that tell you when it drops like that? It means people are pulling money out of the market. It has nothing to do with the fundamentals. The fundamentals don't support dropping that big over a 2-week period of time. It's what's going on in the market, and trying to hold on to these piano players, you see what happens.
Yep. A couple more here, Tim. Actually, last two. DVN, Devon Energy. Mm-hmm. And these, actually, DVN and Fang look okay for the time being. I mean, these are, I guess, some of the very last piano players here. But you can see over the course of the last 2 or 3 days, rolling over a little bit, a gap down today. These are still okay looking charts, but we might not think they look okay, or they might not look okay next Wednesday. You never know what's going to happen. They are holding up today, but they gap down this morning, not immune to the selling. And then, Tim, last couple of things here, and this will be it. And I hate that I don't have a lot of positives or good setups to bring, but the reality is there is very, very, very little positive setups. I mean, like Don said, we don't own any individual stocks. And what we just showed you with AMAT is exactly why we are avoiding individual stocks. You can't own them right now. Even what looks like it's holding up is subject to unbelievable whipsaw volatility. So, last things here, Tim. Upstart, will you pull that up for me? Upstart down, I don't know, 70, 80% from its highs. Still down 10% today. So the main thing I want to highlight here, we're going to look at Affirm next. These were, the fintech heroes, and they may still be, in the long run. But what's absolutely mind-blowing is that these companies that have had 50, 60, 70, 80, 90% haircuts are still having down 8%, down 12% days. They're still trading these insane ranges. So the volatility has not subsided whatsoever, even though price has receded 80%, 70% on a lot of these names, which is concerning to me. You want to see price range contract, a little bit of stabilization, instead of, being down 10%, maybe down 2 or 3%. But it just seems like day after day after day, my dirty 30 watch list is just absolutely crushed, regardless of how far they've already come down. So you can pull up Affirm too. I think it's down like 5% today. It was initially green this morning. The point is there, at this point, there's no signs of stabilization, no real signs of buyers really wanting any of these stocks. I mean,
Affirm's
pull up
Palantir.
Palantir.
Model is now buy now, never pay.
Pull up Palantir as well, Tim. I mean, this was a I mean, everybody knows it hadn't really done well over the last year, but this was a big winner in the beginning of January 2021, ran up to like almost $50. And here we are sitting at almost $10.
Yeah.
Pull up Grow Generation as well, Tim, GRWG.
What are the pot stock? Wow. Whoa.
This was one of the hottest stocks out there for pot back in 2020, 2021, ran up to 60, I believe, or is around the high, maybe 67.
If you're listening to the audio
now
version
$8
of the podcast, please just fast forward to what Hunter's doing here. Just fast forward through all the nonsense and get to the chart. Like, go watch the charts. If you can on the video, find it at Revere. You can find it right here. If you're like, well, where do I find the video? We email it out when the podcast is done, but you can find it right here under the podcast tab. And we post under Daily Market Insights as well. You'll find the video version of if you're just listening purely audio and it gets delivered to your device from the iTunes or Google Play Store. My goodness. These charts are worth looking at because your sell rules come into play. Like, look at GRWG. Let's just take this. Don was talking about the 200-day earlier. You can see this bounce here. I mean, once you break the 21, come back challenge. When oftentimes, and Don, I don't know if Don focuses purely, I don't want to put words in Don's mouth, but oftentimes when the stock breaks the 200-day, that's when institutions give it up. They're like, because you can't show your clients that. Like, you can't, like, who has GRWG on their books right now? Why would you? Like, and go back to UPST. UPST breaks the 200-day back in November, December, and look at it. And we looked at AFRM. Breaks the 200-day, and just look at that. That is, you're like, well, the selling really took place here. No, well, that's when they just gave up. That's like, we can't hold this. Hunter, excuse me.
Yeah, we use the 50-day primarily in house, but
it's earlier,
big money managers use the 200-day, and that is the last line of defense. The first time I read William O'Neill's book, the big thing that jumped out at me was his statistic that on average, big leaders correct 72% from their top. And I read that and I was like, that can't be right. But when you see it in real time, when you get to know the market and you follow these growth stocks and you see, oh my God, 72%, and that's on average.
Right.
It's real, folks. Don't get caught up in any kind of story. You might love your Peloton, but your Peloton stock is doing you no favors.
And
you have to have.
I wanted to get into that
separate
too.
you have to separate the story from the price action.
And it's not just newer stocks. Like, you might accuse them of being not speculative, but speculative. Speculative.
Speculative. That made the newsletter.
That's a good one.
But look at PayPal. If you look to the far right of my screen, PayPal's down almost 47%. Like, it's not quite 72 yet. No. But that's big mega cap PayPal. And you look at Square. I'm curious now what Square is down here. Let's just
60 something percent.
Yeah.
58,
59%.
It's crazy. Affirm is down, I think, 35 or 40 year to date. 3 weeks.
And it's only, what is today, the 21st?
Yeah.
Like
15 trading days, maybe 14.
Yeah. I think Kathy Wood year to date is 40 something like that.
Yeah, boy, sentiment's changed on Kathy Wood, hasn't it? Like, and that's the thing. She's smart. Nothing's changed. She just, by proxy, has to put all that money to work. Man, ARKK.
Hey, Don.
22% year to date.
Don, what's that stat when you're below the 200-day moving average? The average monthly return is negative 2 point.
I'll dig it up. It'll be part of the
or something.
Yeah.
And then when you're above the 200-day moving average, it's a positive 0.8% per month.
Arc from top to bottom, from when it topped in 2021 in January or February, down about 54%. Like, that's tough. And the argument is, are those companies that she's investing in, are they, I don't disagree that Robinhood, she is a big owner of Robinhood, isn't transformative. It is. Like, it's gotten a bunch of young people into the markets, but it doesn't matter. Like Don was talking about story. It just, I mean, this is the wrong hood.
Well, look at Roku as well.
Oh yeah,
Tim.
yeah.
I mean, just
I didn't realize Robinhood was a $12 stock, a $13 stock. I didn't know
from
that. I got
85. Yeah.
Holy Hannah.
Yeah. Look at pull up NVTA. This was my last one. This is in NVTA. There you go. Very similar to Grow Generation in the pattern. But this is a Kathy Wood favorite, biotech. Pull up XBI real quick, Tim. I know I've pulled up a lot of stuff,
right.
but
Well, we don't have to dogpile. The problem, the whole point is the market is very weak. It's very weak, and you should have already raised cash quite a bit if you haven't already. And the dust hadn't settled yet. It may not be over.
Yeah.
Tim, I do have a request for you if you don't mind. And it may not be possible, but are you able to do $CPC instead of $PCall on your screen over there? I'm just curious
there
if
you
it.
There you go.
Okay, 1 point. That's a weird spike. That's got to be a misprint. But me and Alex follow this pretty close. I know, Tim, you've got your range on this CPC. It's kind of that 1.2 to 1.4 area has been the big fear spike area, and we actually got up to 1.2-ish today. But the big fear has been closer to like 1.3, 1.5-ish range over the last 12 to 15 months or so.
Got 1.3.
Which, I mean, there you go. We were right there today.
Yeah. So that this is a very nuanced part of the market right now, where sometimes the best action is no action until the path becomes a little bit more clear. Alex, I've done that twice. I apologize. Alex, what you got, man?
Yeah, I got two things. I was going over some charts, individual stocks, not the indexes, back from 2000, the tech bubble when that bursted. Amazon went from over $100 a share down to, I think it was $6. So that's a 94% loss on your money. What I'm saying that I'm bringing stuff up is if stock doesn't have earnings, especially, or even in a bear market, if we go into one, a stock like Peloton, you're not going to want to hold on to that and say, I'm going to hold on to that for life. And the reason why I bring that up is I have a friend, I'm not going to mention his name, but if he's watching, I want you to listen to this. If you have a stock and it goes down, let's say you buy it at 100 and it goes down 7%, there's a reason that O'Neill developed that system. Because if it doesn't break that 7%, it only takes 7% to get your money back and break even. But if your stock goes down 80%, you now have to get a 400% gain to get even. That's just basic math, okay? Or if let's say you lose 50%, you have to gain 100% back to get even. You are now compounding a loss. Meanwhile, you could have gotten stopped out and gone cash, and then when the market turns back up, you have more capital ready to deploy. And that's where the power of compounding money comes into play. And you can build a bigger portfolio over time instead of just sitting in a name because you believe that it's the next Apple. Well, I got news for you. It's a bike company, and that's all they have. It's not going to change the world. So the fundamental story there is not even there. Besides that, how I feel about the fundamentals, price pays. You don't want to hold on to a loser. Sometimes you just got to cut your losses. This could go a lot lower. People are like, oh, it's going to get bought out. Well, who's going to want to buy that? Because there's other companies that have bikes with a TV plopped on it. I remember when everyone thought GoPro was the next big camera thing, and it's going to change the world with video imaging for sports, and it went up to $90. I'll never forget it. Now that's trading. It's a penny stock. It's $8. So this reminds me a lot of GoPro. But I'm just getting to a point here. Don't marry a name because you believe so deeply in it. I've had names this past year that I've offered and I've traded, and I get a good conviction. But guess what? I get stopped out. I've not blown up once on any of my bad ideas because I have rules, and I get stopped out. That's the key the message I'm trying to convey. You can marry a stock until you get stopped out.
Then you want a divorce.
Then you get divorced. And that's pretty much it.
I'll tell you what.
It's like those 3D printers. Stories in 2015.
Yeah, absolutely. Don's got. I'll tell you what. Don's got the video on Friday night, taking you into the weekend. He'll cover whatever he wants to cover, the 21
over
markets.
21, and maybe like the 1 over 21 now.
Right.
But,
Don will get you all set. The close is going to be important today, obviously. I think
and the
that's
market's weakening right now.
yeah,
as we speak.
that's an understatement. And so, be super interesting to see what happens there. But Danny, do me a favor. Let's do the real super short close, because then I have one last thing.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor. Just send them to revereasset.com. Tell them to subscribe. We won't spam them or junk them in any way. It's up to them to reach out to us if they want a complimentary portfolio review, get some ideas, or just have a topic they'd like us to talk on this podcast. They'll also get our daily market insight video, short 10 minutes every day after the market close. Every day the market's open, one of the guys does that. You can email any of us at dan@revereasset.com, Tim, Don, Alex, or Hunter at revereasset.com. Or you can always call us old school at 855 Real Wealth.
So we'll see what develops. As Danny mentioned, the market is weaker here as we approach the noon hour. Here's where the NASDAQ is on, and I'm focusing on the NASDAQ because it's the weakest indice, right? Small caps are weaker, but the NASDAQ's got with Netflix.
Of the large caps,
Yeah, and so the most likely course of action, and it doesn't have to do this, is to make an attempt, and I thought this was what was going to happen. It didn't develop. Back to the mean. And it's a falling mean. So if it comes back to the mean, that's 15,609.
Downward price is pulling the mean down, is what Tim just said.
And so 15,609 is it's a little over 1,000 points. No, it's 1,000 points from where we are at current levels. Mm-hmm. That is going to be a powerful, point in the market, that's a powerful FOMO move.
Don't get the FOMO.
1,000 points in the NASDAQ to get back up to the mean.
What Tim's saying is you can get very, very strong. The strongest rallies are in bear markets. Yeah. So you could actually get a very strong rally, but it could be short-lived and roll over just like 2008. If you pull up a chart in the fall of 2008, it looks like a double waterfall.
That's exactly, and so.
Well, look at COVID did that too. We had 1,000-point up days. It's called a bear trap.
Yeah. And so it's going to be super interesting to see. I don't know how this develops.
That's why you got to be nimble.
Maybe we.
Yeah, you're going to start hearing the talking heads on TV pulling out their garbage stats if you missed the 10 to 20 best days in the market because you were out. But they will never mention that those best days happen piggyback to the worst days under the 200-day moving average. And so, this is where things get bad right here, plus or minus the 200-day moving average. You get minus, get the hell out of the way because the markets don't get into serious trouble until you break there. But we're right on the precipice.
And 4630 is that on the S&P futures. We're at 4432. These are big moves to just get back to the underbelly of the beast. Mm-hmm. And it's going to...
Which will be resistance.
And so all the negativity you're going to hear this weekend. Now, if this starts to happen, the script...
Meaning a rally.
Yeah, if the rally starts to happen and the script is flipped, it's going to be like the most powerful FOMO force.
Fear of missing out.
And
they got to suck the retail investors in so the big money can get out.
So what is
that's right?
And so what is
that's 100% right?
What is a listener to do? Well, what do you do, Tim? Well, if you're nimble, and you have to be honest with yourself if you are that person. Understand where you're. Who am I to tell you don't get in, don't do something, right? But understand those levels in the indices are really crucial, and that's where the battle's going to be. If this market is to revert to the mean, it is going to feel fierce. You're going to want to buy everything. And it doesn't mean you can't. It just means you have to have that plan. You're always talking, Daniel, about a plan. Have a plan. Mm-hmm.
I'm glad I picked up golf last year. We should go golfing during this bear market. That's the best time to go.
Well, if you're in cash, you can't go golfing. If you're in, you got to walk.
Right now, exactly.
Since Alex just mentioned it. So with the other two kids, Tanya breastfed the children, right? Mm-hmm. And so there was nothing for me to do in the middle of the night. Tanya had to breastfeed, then she pumped it. That's probably a little bit more than people know. There's nothing for Timmy to do. Mm-hmm. But now...
So you read, actually.
No, I slept in the middle of the night. Well. And so, but now Graham is, he's still breastfed, but he's bottle fed in the middle of the night. And so we split it. So I don't breastfeed them. That's funny though. I bottle feed them.
It's like Robert De Niro in Meet the Fockers.
That was a good
Sorry,
scene.
I had, Tim's got a little. Tim's got a little. What do they call it? Backpack, nipple bag. Whatever.
Yeah.
Can you milk me?
That's a good movie.
Such a good movie. So Tanya used to watch like Game Show Network, or she'd get into a show, and she'd watch that while she was, feeding,
we got it.
feeding the kids. Now I'm up, like I'm feeding Graham, right? And so it shortens the time, so we can get back to bed. And I'm like, oh my gosh, they're showing live golf on in the middle of the night. Like,
Get outta here.
Yeah, they're showing the Asian tour on Golf Channel.
Yep.
Yeah,
Hey.
and it's live. And then they go European tour.
You're not watching the European Asian markets? Wow.
You know what? I did that for a little bit, and it's the same stuff. Like, there's only so many times you can. There's nothing new. Yeah. And then they put on, like all the analyst downgrades that came today for Netflix. How worthless! Like
After the fact, yeah.
Hey, I'm here. Like after your house burns down, the insurance salesman shows up. Do you need fire insurance? A little bit late. So anyway,
Hey, there is an active management company that owns more Netflix than all of the index funds in the world combined.
Wow.
Say
How
that
do you-
again, please.
They own 14% of the total float of Netflix. It's more than all of the index funds in the world combined. How do you think they're feeling today?
Oh. Ouch.
Probably binge.
Just a bit outside.
Margin call Monday.
No, they're probably watching Squid Games.
That's got to be it.
They're probably playing Squid Games.
There you
Yeah,
go. Take us home, Daniel.
All right, folks.
pretty good.
We'll talk to you next week on Your Money.